Good morning, traders, and welcome to the Elliott Wave Street free weekly video. I'm Juan Maldonado, and it's a pleasure to be with you today. Please read our disclaimer and terms and conditions on ElliottWaveStreet.com. All right, so let's start with the euro. This week is going to be one of my favorites. It's a pretty risky week. Have you checked the risk for the week? Wow, it's crazy. We have a huge VIX this week. We have a pretty complex scenario after the Fed last week. But look, on the weekly chart, if we compare the actual crisis with the previous one, the 2008, the VIX went to the 96. And this one went above the 84 area, and that's it, and is going down. So the normal reading on the VIX, it's somewhere between the 10 and the 35, 36 area. That's the normal thing. And the ideal thing is something below the 24, 25 area when we have a lower risk. But when the market is like this, when it's increasing the risk, then we have to be more careful. And that means reducing the size of the trades. For example, if we usually trade with 1%, let's go with 0.5%. If we usually trade with 2%, we should go with 1%. Because when the VIX is going up, or when we have a big VIX, because this moves more like an oscillator, then we should reduce our risk because the market is more risky. All right, so let's see the euro. I have a sell trade already that I share with my clients. If you take the Elliott Wave Street membership, you're going to have access to my Telegram channel to receive my trades. So I already sell the euro, and I'm looking for a conservative target at the 112.12. If it goes lower, I'm gonna let it run. Now, what if the euro already ended the wave 2? Because that's where we are on the daily chart. The big question is if wave 2 ended. If that's true, then we are going to have a leg down back to the wave 1 area. I think that the wave 2 didn't end yet, and we need to have another move up, another leg up. That's what I'm thinking. Now, if we have that leg and price fails to invalidate the wave count at the 115, I'm going to start finding a way to sell the euro, something that I call the big short trade or the great short trade on the euro. Now, let's go to lower time frames again. So for now, for the shorter term, I'm short. And I want to target this leg over here with a small stop loss. Now, if it reverses over here and it starts building a 5 up and a 3 down, I'm going to say, oh, that's my wave 1 and 2, and I'm going to buy the euro right here during the week. Right? But if the price fails and it starts adding more momentum to the downside, then things could be different. And I'm going to keep my short trade in that case. Right? Let's see which direction the euro wants to go. Now, on the pound, something similar is going on. On the pound, it seems that we are going back to this level right here, at least the 124.75, or maybe the wave 1 remains active and we can have a lower low below this low. So I'm short on the pound. All right? I'm going to sell soon the pound, pretty soon. I'm going short. Of course, I'm going to share the entry with my members. And then I'm going to target here to take some profits or maybe full profits. We will see there. And here will be another target. So short pound, short euro. Small little trades. Because I'm planning a bigger trade on the dollar yen later. But you need to take the membership in order to to see the plan. I already posted the action plan on the daily video today. Let's jump to the S&P. Oh, the S&P. So from the weekly chart, the trend, we can say that the trend is still up on the S&P. We don't have a trend reversal yet. And I think that the S&P is not going to crash. Maybe later, maybe. But now I think we are going to have some choppiness, and the price on the S&P can go a little bit lower and then can make a higher high. Now, if we go to the lower time frames, it seems that today the S&P needs to make a lower low. And that could be the end, We can have like high volatility over here where the price can go lower here and then start showing a lot of volatility, like something similar to these tails, and maybe jump to the upside to create this B wave, and then we can have another 1, 2, 3, 4, 5 sequence for the C leg. And from there, if we have a double bottom confirmation, could be a buy trade. All right, that will be interesting. Now, if we check the bond is pretty interesting because during the Fed, we have, or before the Fed, we have the bond going up. This is the 10-year bond. We have the bond coming up here, and then the price started to climb during the Fed, and that was the S&P crash, right? That was the S&P crash there. So it's telling that the bond was a leading indicator. Clearly, the bond was a leading indicator because it was telling that we were going higher and the S&P was going lower. So this time, in order to have a clear S&P reversal, we are going to look for a nice 5-wave sequence on the bond and 3 up, and then we can sell it. Wow, what a complex situation during the pandemic. Pretty complex, the things we are seeing these days. All right, traders, so this is just a small sample of all the work we do inside the Elliott Wave Street membership. During tough times, it's good to have a good analysis, so visit elliottwavestreet.com. Under the membership tab, you will find all our membership levels where you can pick if you're a forex trader or a stock trader, or if you want to go with the full access. You can trial the service for a month for $19. And if you want to add the forum access to ask questions, to see a little bit more of content, go here and pick the forum access. Have a fantastic trading week, and I'll see you inside the membership. Take care. Bye-bye.